Hi guys, how are you doing? So this is a recap for the trade. As I mentioned this morning, the XY might be pushing towards the 62% fib level. So on the 4-hour, we were about here this morning. We crossed this buy-side liquidity above this level. And then we still have remaining a buy-side liquidity above that is now touched there, which is also closer to consequent encroachment of this new week opening gap. But since the 62% level lies above, I believe this will go higher, close all this weekly sell-side imbalance, and then possibly go higher. Why? Because in euro we have a liquidity void on a 4-hour here below, and also there's a fib level expansion that we can do like this. So we project the lows, on the week. On the week we have an expansion until to this buy-side imbalance on the 8-hour, but if we just consider the bodies, we'll be having a drop until more or less this level. So it's more or less safe to say that this volume imbalance might be target today. Just remove the arrows first. So this is a live account, trading, executions, to make it more cleaner. And I have some comments to say regarding algorithms theory that cannot be thankful enough about ICT and Michael to incite us to investigate how the algorithm works. And I found a few things interesting that I would like to share with you guys. So what do we have here? We started the morning. Let me put on the 15-minute. The trades, executions. So I entered first here, then start selling. So I had more or less an average price. So my initial risk was more or less above or consequent encroachment of this candle. So I had like a 2 pip stop loss, and I entered another 4 shorts, and I closed the 4 shorts there and made the profit for the day and left a runner. So then I was putting always the risk well below the initial risk, so always making sure that it's behind a fair value gap. But what is interesting is you see this. Let me just put on a 15-minute, so where we are already. So we had an interesting candle, which is this one, closely matching that one. See, this is a wick, and then the body, no wick below, and the same here, no wick above and a large wick. And then afterwards, these 2 candles are exactly the mirror of each other. If you see, if I put like a box like here and transpose there, it's exactly the same. So it's another proof that the algorithm exists, and there's nothing about buying and selling pressure here. There's no, so it's the algorithm that is doing the work. So I secured always this last entry at break even, so I had it at break even. So price came on this 15-minute sell-side imbalance, just tagged the consequent encroachment and started to go lower. But you see this candle has no wick. Normally when there's a no wick candle, there's a spike above and then removes lower. Why didn't he do it this time? Because most probably was already projecting to do this candle. So that's why I put the arrows here. So these two are like the mirrors. So somebody starts, well, the algorithm starts create this order block. So this is a bearish order block, and then match the order block, but changed the structure on the jeu de swing. Let's call it this way. Another interesting fact is if we go into, this is a 1 hour, on a 1 hour. So we have the sell side imbalance, and this is what is called on a 1 hour. It's an institutional order flow entry drill. So let me just see if I can put it here. Remove these arrows. There. So this was an institutional order flow entry drill, and on the 1 hour, not on on a 15-minute, it did cross above the consequent encroachment. So we cannot consider this a 15-minute institutional order flow entry drill, but on a 1 hour it is. Another interesting fact is that here above, we just shorten this, we add, so this is a market maker sell model, because on the 4 hour we have all this consolidation coming above and then closing, but from the larger perspective we have also this one. So this is a consolidation there. Let's remove the wicks. So price, so this is on the 8 hours or closer to a daily. Let's put on a daily. So on a daily basis, euro came above. So this is smart money entry. So first level of accumulation, second level of accumulation, and then we can even say that this is low risk. Well, this is the first level of accumulation, low risk buy. It's inside with this shift in market structure there. It's a turtle soup. So it's a smart money entry. First level, then came above, then started to go down, and then we expect it to run these lows to complete the model. So that's the reason why when we started the day above this level, before the taking off, or you call it taking on this low there, so we started here the morning, so it's a one shot one kill perspective. So on a daily candle we entered exactly above these levels, or around these levels, and then we are just shoving it lower. And now what I will consider is the following. We have the bodies on the previous candle as a benchmark. Okay, so if I put here, so I expect price to reach this level, the same as this candle, because we are seeing algorithmic price that matches. So this will mirror exactly these bodies. As for the bodies, and then we might have a spike below in the same proportion of this wick above there. Oh, the square is not helping. That wick will be most probably transposed to below this level. So this might be the low of the day, although we have potential to even go lower. But bearing in mind that this is a liquidity void on a 4 hours, so there's no price there. I will show you. So we have liquidity. My goodness. So okay, so we have this liquidity void there, so no trades inside these two candles, which is below this sell side liquidity that I have identified here as the draw on liquidity. And so price will be going down. This is where I believe the bodies of the candle will lie for today, which is based on the previous daily candle, as mentioned before. Let's put it again. So this bodies on the previous daily candle. See, maybe it's even lower. So this is the bodies. We have exactly too many fibs here. So there it is. So the number 2 is matching over there after this. So that's the body. And then if we do like this, sorry, something's not going on. Okay, there. That's the body. This is the body of this candle. So yeah, we might expect it to come all the way down here to 107.17, which is exactly this sell side liquidity, and then we will still have the spike through to produce the Judas swing, which is putting this wick down below, because we have a very tiny wick. We haven't got a wick that came all the way above. So we had a opening, a runaway gap. I'll show you here, that is propelling price lower. So below this 107.17, we might be reaching today, by the end of today, this level 169.3, which is half, more or less half of this sizing, more or less about there. 169.7 would be the end of the day for today. So this would make a trade of one shot, one kill as follows. So starting here, short, if we had maintained the trade, but I was happy with what I got. So it was a very minute stop loss, 2 pips there. So it's a 1 to 10 trade, more or less, if it goes all the way. So starting in this candle, more or less, let's assume it was here. I need to put the price. Second, trading, execution label. So I entered on 788. 79, more or less around there on this candle. So stop was above this consequent encroachment. So it was a profile of first with one. So it was a minute risk. I believe I had $15 or $20 risk, or even like that. Let's assume it's like that. So even so, it's a 1 to 10 trade. Now let's just consider the one we are active. So it has remained above this fair value gap, or this one, for a while, and then I just put it at break even once we just broke this level, and it's there. So this would be, if it goes all the way to the very end, 1 to 16. Only with this one, which is current active, which is a pretty amazing behavior of the algorithm. It's all thanks to Michael and ICT, learning a lot with him and exploring how the algorithm works. So I am expecting this liquidity void. Let me just remove the trades. The liquidity void to come all the way. Execution labels, remove it. Okay, all the way, tag this liquidity void, but for the sake of the trade, I'll be exiting there at this sell side liquidity to complete part, because we have a volume imbalance here. We are on a daily, so we have a daily volume imbalance there that price may want to tag. So it's the buy side imbalance on the daily. So price might want to even come and tag this level, although my expectations is just to arrive at 169. So it would be there, 169 is my estimation due to this. This is the body, that's the body, it's a mirroring. We'll come to this level, spike lower, and then retrace inside of the range. Well, I hope you enjoyed it. Before we finish, let me just check what DXY is doing. So in the morning, DXY was to break this level, broke with momentum, put on the 15-minute. Even did not came much to retest it. It's coming to the new week opening gap. I believe it will spike above, cross over the 62% on the fib for any possible retracement. This is very bullish. So we had last week the spike above, so we could more or less project by using this line, something like this, or even if we assume that this was the exhaustion candle, we might have something so clearly above 62 and possibly above this weekly volume imbalance. And if we do like this, it might even approach this new week opening gap, so it might even spike above. So we might see a run on euro. So I believe the low of the week is set for euro on Monday, and this will be just plunging until 106 or something, or consequent encroachment of this fair value gap, or even touch the upper side. And that's it for it. I'll let you know in the future how it run, but I'm already happy with the results because I cashed in already. So this is just a runner that is left behind with the 1 to 16 trade by entering here in the morning with a very tight stop loss, and cashing in, and then so bearing in mind that I entered around this level. So this was a breakaway gap. So according to Michael's theory, price action theory, when we see a runaway gap, price is bound to dive much lower and will not retrace, will not spike back to fill the gaps. So we have a runaway gap. We have this one that actually has this spike, but was also left open, so price did not come to this one. So we have mostly two. This is the main one. We have two, so it's extremely bearish. Then we have this candle which is matching exactly with this candle, so a no wick candle. And then price hesitance to go above the consequent encouragement on an hourly basis, did the institutional order flow entry drill on the 15-minute, came above, so this is the immediate rebalance, and then just this is another runaway gap basically. So on a 15-minute, so price even did not do institutional order flow entry drill, just came there and spiked. So 10766, 10766, so another breakaway gap here. So two breakaway gaps. So which points me breakaway gap, which points in the direction of much lower prices for today. What can occur is that since we tagged this volume imbalance, daily volume imbalance might get some strength to push price and tag this breakaway, create an institutional order flow entry drill, and resume on lower for the rest of the day, while the XY is still failing to arrive at the 62%. So it needs first, might be consolidating here during New York lunch and so on, lunch hour, and then at the end of the day, I believe this will just touch base with the optimal trade entry, and then we'll see if it wants to keep on moving higher or just retrace lower alongside this bearish move. But it seems to be very bullish at the moment, so when it arrives at this destination, might even want to come to the 79%, which will put more pressure on euro to go and dive deeper into this fair value gap, and even approach, if we see just the bodies here and make a projection. The projections on the bodies is pointing to 172.3. I have my buy limit below, so I'm expecting it to have a spike below this, fill this part of this liquidity void down below and reach 169 more or less, because there's a tiny volume imbalance there that also can be accounted for here before the order block. So that's the order block, so price might want to tag there 168.5 today. That's my perspective, and it's not showing any signs of going higher. It's just retracing to go higher. Yeah, now the XY is making this fair value gap there. Sell side imbalance. We are on a 10 minutes, 5 minutes. So buy side imbalance. Touch here, goes higher. Touch this sell side imbalance, go lower. And then if we compare this with GBP, it's doing more or less the same. So it's a synchronized market. They are dancing together today. So there's no SMT. So they will be driving lower for the rest of the day. It's my assumption. Well, I hope you enjoyed this recap on this trade. It has not finished, but as you know, we are positive, gaining momentum. Now we came below this. What I will do is to put my stop more or less around this level. Just see why. What's happening with the rest of the price? Okay. Where's, yeah, right above Well, on the 30-minute, we have this order block. To be completely safe, there's this order block, consequent middle threshold. I'll put one tick above and see. So needs to endure all this order block if you want to go through this breakaway gap. There's a huge spike, but as mentioned, I believe this just will erode all this wick, while the XY is moving higher to reach the 62%. By that time, it will be below this, probably this wick, and with momentum arriving at destination. Well, see you guys. Thank you very much. Bye bye. So 1 to, as a summary, 1 to 12 trade more or less, but the actually, well, we are positive anyway. So we started here, stop was around above this fair value gap, and then terminus would be, it's a 1 to 10 ratio, which is risking with the one lot $7.5 to get 75 basically. So 1 to 10. Keep in touch. Bye bye.